I know there's a huge sense of urgency right now when it comes to starting an investment portfolio. A lot of people saw what happened in 2008 and got scared of investing and scared of the stock market in general. But then they saw what happened after the crash. We saw unprecedented growth, a humongous rally that went on for years. So now all those people, realizing that they missed out in 2008, are trying to catch up and learn as much as they possibly can right now. Nobody wants to miss this go-around, this recession. Problem is, a lot of people are going to get hurt because they had 8 years to learn about the stock market, to make some investments, and they didn't. And now they're trying to make up for lost time. I see a lot of people doing a lot of very risky things, buying options that they don't know anything about, entering very complex trades, spending a fortune on penny stocks, only to lose 100% of their money and realize they goofed. Please, start small with some investments. Baby steps, start with investments. So I've been getting a lot of messages from people asking how to become a day trader. Don't worry about becoming a day trader. First, figure out how markets move, understand volatility, learn about markets, learn about investments, and make some investments. Study the markets, learn what happens on bull days and on bear days. Learn what happens when markets crash. Familiarize yourself with market rallies and market downturns. Learn all that stuff. Nobody's going to become a hot shit rock and roll stock trader overnight. I said it before, but you gotta learn to walk before you run. Learn to invest before you trade. Otherwise, it is a surefire. I've had so many people write me going, I wish I had paid attention. I wish I had learned before. I lost $10,000. I lost $30,000. What am I going to do? Some guy in Italy wrote me and said that he lost $700,000. Trading isn't some get-rich-quick scheme. Don't spend money on some course by some scam con artist. Teach yourself and learn. Start with investing. So the normal train of thought on this is, if you want it, just buy it. Generally, the consensus is that stocks go up over time. That's the goal, right? At least the good ones, not these shitty penny stocks that everyone's pumping up on Facebook. However, what I would say is it depends on the overall markets at the time. So let's say it's a really strong bull market. Stocks are just going up nonstop all the time. And there's a stock that you see that you really like. Should you wait for the lower price in a bull market when everything's moving up, or should you just buy it? Remember, the general consensus is the good stuff usually goes up over time. So it doesn't really matter when you buy. If you're planning on buying 100 shares of a $20 stock, $2,000, is it worth waiting for it to go down to 19 or 18.50 to save 100, 150 bucks? Or should you just buy it? 4 years later when the stock is like $50 a share, you're not going to be sitting there going, I should have waited. I could have got it at 18.50 instead of 19.25. But you're buying in a bear market. Couple options. Option number one is to wait, right? It's a bear market. Everything's going down. Why would you buy that $20 stock when, it might be 15 in a month or two, or 10 even? If it's a good company with good financials and good fundamentals, you can wait. You might get a bargain on it. Option two, since we don't know when these bear markets will end, is to do something called averaging down. So using that $20 a share company, you've got $2,000 and you want 100 shares. Why in a bear market would you spend all $2,000 all up front when it might go down? What if that stock goes to 17? You wasted all your money. You can't buy it any lower. So for this option in a bear market, which we're going to be in soon if we aren't already, would say buy a little now, 25 shares, buy it every time it drops. A little bit more, a little bit more, a little bit more. Getting started in dividend reinvestment is super easy. Here's how you do it. On your Ameritrade account, you click on dividend reinvestment. It's going to take you to this page. You're then going to click on enroll or edit right there. Then all you do is add all the companies that you own that pay dividends. By the way, you don't have to enroll every dividend paying stock in DRIP. You can choose to keep some that just put the cash in your account so you can use that for bills or to save money or whatever. It doesn't have to be reinvested. And then once you get a dividend, this is what it looks like on your account. So it shows you that you got $65.83, and then they immediately reinvested that back into these fractional shares. Not very many, but that's because it's Apple and their stock price is pretty expensive. That should get you started.